All right. So I had mentioned in one of the previous breakdowns on the AOSL chart that I took a similar play. Although I didn't take that one, I took a similar play on some oil and gas names because the sector as a whole was looking pretty strong. So I wanted to look at a couple of those and just show kind of what I observed, what I was seeing, and why I did take the plays. Although, as I think I also mentioned before, I sold them too early because as someone who's trying to switch from a scalper to a swing trader, I tend to not trust the setup just yet. I don't. I'm not as used to it because as a scalper, if I see several points in the green, especially, I'm like, all right, because a lot of times I'm fighting for, 50 cents or whatever, get in with 1,000 shares or so, get 30 cents here and there, 20 cents here and there, and you can have a pretty good day. Obviously, sometimes you catch ones with huge momentum, and that's amazing, but I do think that in the long run, day trading, like scalping, is inferior to swing trading because you're doing more work, you're making more decisions, and you're capturing smaller moves to do, like with the added work and stress. Most of my problems or red days, bad trades have came about because of issues with my execution, which a lot of that is tied to like psychological reasons, as far as FOMO and all that kind of stuff. But the fact of the matter is, when you're swing trading, you're planning more, you're making fewer execution decisions, and therefore, if the bulk of your issues are coming from execution and making decisions, then you're just cutting down the potential issues that could arise. So, I just think trying to become more of a swing trader is significantly better than trying to scalp or day trade. In a high VIX environment like we're currently in, I do scalp still because the breakouts don't seem to be reliable in such a market environment. So what I tend to do in times like this is pair trade triple leveraged ETFs, which, for example, really common ones I'll do is TQQQ and SQQQ. I'll watch the NASDAQ, the Qs, and trade TQ and SQ accordingly. Or UVXY and SVXY. I don't know. There's a ton of them. I can show you my watch list for them later here. But what I wanted to look at once again was this move on the oil sector. So I originally found this because I watch Chris Kulamagi in the morning, and he had mentioned that the oil and gas stocks looked like they were setting up. And as someone who's trying to learn what the setting up means, and I've reviewed a good amount of his content and watched his videos, he's got excellent content out there. I started watching him, and I was watching him for approximately, I'd say about 3 weeks or so. And I executed on these on New Year's Eve. Now, Chris bought several of the same names I was in the next trading day, which would have been the 3rd, the 3rd of January. And technically, I do think his entrance makes more sense if you're thinking about momentum. The reason I was comfortable with my entrance is because, as you can see here, and this is XOP. This is an ETF that tracks kind of the sector. I have the names, the top holdings of this ETF right down here, and I just do that regularly. I look at the ETFs to find a strong looking sector. I Google the ETF's holdings, and usually the top 10 or so weighted holdings, I'll go through those and find the strongest of those for what I'm actually going to purchase, what I'm actually going to make a play on. Now there may be other factors, like I'm not just looking for the high relative strength. Obviously that is like paramount, but for me, I'm also a big fan of being in the the names with the highest ATR, or at least the highest ATR to price ratio, because if you catch something with a higher ATR in the right direction, it puts you in the money fast. It works quickly and aggressively, and that's what I like to see personally. So if all else being equal, whichever one has the higher ATR, I will always go for that name. But as we get into this, you'll see right here on my chart, right where I have the cursor right now, this was New Year's Eve. This is the day I bought. Now my reason for buying is all the moving averages are tight. It's a strong sector, a sector that's seen to be kind of inflation resistant to a large degree, because these type of businesses, oil and gas, energy as a whole, is easily able to pass on inflationary costs simply because no one's going to just freeze to death, and people are going to continue driving and all that. There's plenty of macro reasons why the sector is in play. But what I really liked about this particular entrance is that you can see here we're kind of bouncing around a bit, right? And we come back down a bit from this last little move up, but we don't give the whole move back. I guess when it gets real choppy on the Qs, we give the bulk of it back. But what you have is a lot of these moving averages tight, in a pretty tight range. And then you have this candle up. This is what really piqued my interest. Is I had been watching this, as I said, for a few weeks. And then when we had this up, and then it had, now this one isn't technically an inside candle. I get that, I understand that. But the meat of this candle is pretty much still an inside candle. I'm going to call it an inside candle, even though it's not really. And then you have these 3 days where, look down here to the volume. The volume is lighter. They're pretty much inside candles. At least these 3 are inside candles relative to this green day here. So what I did is I bought this day, and my thought process kind of was, we're right on the 100-day moving average, which is these blue lines here, the SMA and EMA. EMA is the dashed, SMA is the solid. The moving averages are tight, the sector's looking good, so I bought here, and I sold a bit too early. Once again, recovering scalper, trying to hold on longer, but I didn't quite. So I bought this day. I sold, excuse me, I sold a portion this morning, kind of right in this range, half when I say a portion, and then I sold the rest this day, I believe. I can't actually recall 100%, but it was right in this region here. I think I was below 110 actually. Yeah, so I should have let the stock take me out, which I still probably would have got the same or less. But I should, if you're playing this strategy, you should let your stop should be based on something logical, like a moving average or a certain, like a whole ATR or this, that, or the other thing, whatever makes sense to you. As long as it's logical and it's uniform and it's systematic, it's a methodical process and not just like whatever you feel, which I kind of ended up doing whatever I felt like. And I didn't like that, but it is what it is. I'm improving. I did buy a little bit of XOP, but as I stated before, I usually buy the strongest, my favorite of the holdings. Before I really delved into a lot of the energy names, though, I looked at another common energy sector ETF, which is XLE. So this one, here's several of the top holdings. It's very weighted towards Exxon and what is this? What is that one? I forgot what that one is. Chevron. Yeah, okay. Brain fart. But it's heavily weighted towards Exxon and Chevron. Like, I want to say it's like 40%. XLE weighting. Yeah, Exxon is almost 24% of the weight. Chevron, 20% of the weight. and then we go EOG and so on and so forth. Dramatically lower weighting on these, you know. So yeah, it's super heavy towards these two. So because of that, and because those names, I believe, are also in, CVX, XOM. They're also in the other ETF. So those names are in both ETFs, right? So anyone who's just playing the sector is getting a good chunk of those, and that makes me like those as well. I didn't end up buying Chevron. I did buy Exxon, but to go to my other executions here quick. Oh yeah, so I also bought ERX, which is a leveraged ETF that tracks the energy sector. It trades, now if you look at the daily chart here, it trades very similar to XLE. If you just like look at the candles and like look at the pattern, it trades really similar to XLE, but I believe it actually tracks IXE, is its direct like parent, is what it's leveraged and based off of. But that being said, I bought this one the same day, 12/29 or 12/31, and sat in it. This one, once again, I sold too early. I sold about half my position in here when these days were kind of treading sideways, and I was like, oh, I'm pretty well in the green, I'm going to take half off. And then I sold the rest on this day when it looked like it was losing momentum. I didn't take the opportunity to get back in. Obviously should have. Super strong sector, still going up. As you can see, today's candle, a new high for recent times here. But it is what it is. The other names I bought were PXD, Pioneer, and EOG. So Pioneer, we have, once again, exact same day. Pops up, treads sideways for a decent while. Pops up, tightens up through here, and you saw pretty much the same thing I saw on the overall XOP chart, except for a little more strength on this one in that you didn't have 3 consecutive red candles before the New Year's Eve candle. So this one, I actually ended up buying a portion of this one on the 30th, and then even though you're never supposed to average down, it was a fairly small position percentage wise. So I did add a little bit, or I shouldn't say add a little bit. I doubled my position on this day, but it was still above my stop, right? So if it would have closed, in theory, my stop was if it closed below the 50, like even a little bit at all below the 50, then I was out for sure. But of course, volume and some stuff comes into play there. Because I execute based on like the 15 and 30 minute chart. So if something's hitting my stop and it's bouncing there on like the 15-minute chart, I will give it a minute to kind of redeem itself and pop back up. It's not like I'm just looking at the daily chart and saying like, oh, it's on my stop, I'm going to leave it. Or, I'm exiting the position. I watch, because I've had plenty of times where it comes down to my stop or within like a point or half a point, depending on the ATR of the stock, of my stop, and it bounces there for a minute and then gets bought right back up, an hour later. So I really don't like to execute when it's not based on the close of the day, with certain exceptions. But yeah, so this one has similar pattern. I get in, I took some profit in here, just because it was feeling extended, and I had a pretty good gain. Should have let the stock take me out because I could have got quite a bit more bang for my buck here. I sold the rest of my shares on this really bullish day. I didn't get the top, of course. I want to say I was just over 210. I was somewhere in this range. But once again, as you can see, if I would have just waited, been a little more patient, and trusted the trade for a bit longer, I could have gotten substantially more money. Like we're talking, drawing. What is that? Even if I didn't let the stock take me out, I could have gotten like approximately 7 more points out of that, which is significant. That's not, that's a good amount. That's a notable amount. Now it wasn't a huge position. I want to say like my total position was 150 shares. I think I bought 75 and 75. I should note that down somewhere. Maybe in my, I subscribe to Trader Sync, so maybe in Trader Sync I should. But same thing, once again, EOG chart pops up, moves sideways, getting tighter and tighter. Moving averages kind of all closing in on each other. It's surfing around the 20 and the 50. And I execute on New Year's Eve. 3 to 5 days in, I sold a portion and took myself out in this range. So I didn't have to suffer through any of this, which is nice. Although I wouldn't have anyways, because when it broke this, I probably would have just bailed. And once again, sadly, I didn't try to pick some up on this bump into the 20 EMA here, which is a reasonable thing to do. Like I've mentioned before, I really like this kind of range, where it pops up and it tightens up, buying right in this area here, because you have a much more visible spot to risk off of. But these EMAs and SMAs are pretty well respected, so it's reasonable in a lot of times to, even if it's a smaller position, maybe take like a partial position as it, reclaims this, and then if it closes under it, just get rid of it. So like your stop is so tight that the risk reward is still very good, simply because if it doesn't hold that, if it doesn't hold that moving average, you can just get out and say, I took a stab, super tight stop, barely lost anything, and had it won the risk to reward. Like even if you bought this as it reclaimed here, let's check this out. Your risk was 1.37%, and if you would have stayed in this a few days, let's even say 3 days, you would have gained about 11.4%. So hell, even if you sold the top of the next day towards the top, you're still looking at like a 10-to-1 or better risk to reward. So it is reasonable to sometimes try those bounce plays off of key moving averages. I wouldn't be trying those off the 10, like the 10, or this one here I want to say is the 6. Yeah, it tells me up there. Yeah, 6. Which is just something experimental. I really don't do anything based off that. I just put it on there to see how moves happen in relation to it. And at some point, maybe I'll make it the 7 or the 8 or the 5 and just play around with it and see if there's any relevance to it. But yeah, so that's something you can do too. It is actually kind of setting up nicely again here. I'd like to see it, kind of drift sideways for a little bit and tighten up to the 20 and then maybe get into it. But it's still a really strong sector. And the other one I bought, XOM, same day. I forgot my stop drawing on it. So whenever I make a purchase, I generally draw a couple price levels. So like, for example, I'm just going to draw them up over here in an obscure place. I'll make a price level and then I will turn it blue, solid, 2. That'll be my entry point. And then my stop is always, I'll make a price level, make it red, solid, 2 thickness so I can see it really easy. And then I'll put, I'll go out maybe 5%, 10%, whatever, and put a few more price levels just so I can see how it acts around those points and judge how comfortable I am staying in it or whatever. But yeah, you can see my original stop order here from when I bought it. Remove. And full disclosure, I bought this on accident. So I meant to buy XOP, but since XOP and XOM were really close together in my list, I saw XO and I clicked on it, and I already had the actual XOP up on my side chart over here. You can't really see. I think I have a where's my other camera? This one? Yeah, so XOP was up over here, and I was looking at it, and I was like, I should execute on that. So I don't execute from that because that's on a whole different computer. So I can't execute really off these. I can technically, but it belongs to a different mouse and a different keyboard. So I use my main PC to execute. So I clicked on this and I bought And for a split second, I was like, oh, should I bail out of this because I didn't mean to buy it? And I was like, you know what? No, it's in the ETFs. It's in the strong sector. Let it work a little bit. Once again, I sold too early, especially because this one was a mistake. I felt like I was blessed to get anything out of it. But I sold, I want to say I had 300 of this. I sold like 100 here, 100 here, and then somewhere in here I sold another 100. I should have left my drawings because I had all the drawings on there like a couple weeks ago. But I did get a good gain out of it. But once again, you can see I did not stay in this anywhere near long enough. I didn't let the stock take me out, which is what I should be doing. Like getting a move like this is when I should maybe move my stop up to one of these points, maybe like right in here or something. And then the next time it makes, because if you think about like the Darvis method of the stair steps, move your stop up to a reasonable area at the lower step so you can give it room to breathe, and then boom, it moves up. Probably I would have got stopped out on this, I would imagine, like in this range, maybe here. Unless, like I said, if I execute on the close, I wouldn't have, because they stayed closing above the 10. Closed here, closed here. So this one was probably my biggest mistake, honestly, because this one, there was no reason for me to have gotten shaken out of this, in hindsight. But, adapt and improve, I guess. We'll see. But yeah, let's go. What if I go to my main screen here? So this was kind of like my watch list. These are all the oil names. Names I was watching based on these ETFs. And once I found the holdings of the ETFs, I would just kind of click through. And I was actually this list down over here, which you can see all these names. One other name I did execute on that I wasn't in very long was this. I don't know how to pronounce whatever this is. Is it Shinare? I don't know. I'm not going to try. But this one was a little bit lagging. And then on this day where it got down here, I did a little bit of a bounce play. I sold it like a day or two later, so I didn't stay in it very long. But this one had high ATR and good relative strength, and I was like, you know what, let's take a little stab, because at the time when I took it, I was flat or close to flat, so I was sitting in pretty much all cash. But yeah, so that's kind of my breakdown of the oil sector plays. One Investor's Business Daily just talked about today actually was this one here, which is a natural gas play. So it's kind of in the same sector, but before I was playing oil more, so it's not, it's energy, but it's not oil, But they just talked about this one in a video today, so I'm probably going to add this to my standard watch list for this coming week. Hopefully it can kind of drift sideways and we can get a nice level to risk off of and ride it up a few points here. Maybe I'll actually stay in it long enough to get my money's worth out of it instead of taking it off way too early. And then that was like the worst feeling too, because that was like the first swing trades I really took with size were those oil names. I had my full account with margin deployed on between those names, XOP, ERX, PXD, EOG, XOM. And I had my full account with margin on those. I had like almost zero buying power left, and I could have gotten so much more out of them than I did. But yeah, once again, adapt, improve, and that's why it's nice doing these kind of reviews where I'm sure I'm pretty much just talking to myself. But it's nice to talk through the trade and go through what you're thinking and have kind of like a little vlog to go back on over time, especially as I am somewhat newer to using TraderSync. I subscribed, I actually did the paid version of it not too long ago, and I go through there and update and journal and put in screenshots of all my charts and all that stuff. And yeah, so that will be it for this one.